If you have been following the channel, you might have seen one of my financial updates. Videos where I share my financial situation, talking about my income, my expenses, my investments, and my net worth, doing it in the most transparent way possible. By watching those videos, you might get a general idea about my investment strategy and my asset allocation. But I decided to make a dedicated video in order to break it down and explain to you guys what my long-term goals are, why I chose this strategy, and how I adjusted my investment portfolio accordingly, so you might hopefully get inspiration from my case. But before showing you my asset allocation, let's talk about what makes an investment strategy. Not in order of importance, the three main factors are your goals, your time horizon, and your risk tolerance. But before going any further, I want to make something very clear. Be skeptical about anyone telling you there is a single best strategy. There might be some strategies objectively better than others, but no strategy works for everyone. And you just gotta find your own based on the factors that I just mentioned. Personally, I don't expect any major expense in the next 10 years. The only exception would be starting a business, and yes, I'm already thinking about it. I already have some business ideas, but in order for me to take them seriously, I first need few things to go really well. And one of them is this channel. If these things will work out, I will have enough money to fund my ideas and to create the companies that I have in mind. And yes, they are a few. But anyway, since these ideas, these companies depend on other factors, I don't feel the need to start saving for them or anyway let them influence my investment strategy. Another goal of mine is, of course, in the next few years to be able to move out, since right now I still live with my parents. In order to do that, I will eventually need some money set aside, but since I don't plan on staying somewhere for too long, I will probably choose not to buy a house, but to go and rent a place. That obviously requires some money set aside, but considering my high saving rate, I feel like I'm gonna start saving a few months prior to me moving out. Once again, I don't really think it makes sense to make this scenario affect my long-term investment strategy. Talking about strategy, I don't plan on sticking to the same one for the next 20 to 30 years. I have ideas, I have plans, but I'm young and things can change drastically and quickly. That said, I don't foresee any big expenses coming, and I don't see a reason to change strategy unless that happens. So I expect to stick with this approach at least for the next 8 to 10 years. When it comes to risk tolerance instead, I'm almost immune to volatility. It wasn't, of course, always like that. I used to check my portfolio daily and stress so much over a 1 or 2% drop of the market. But let's be honest, who hasn't? Probably I just got more comfortable over the years, and either way, I'm young. If I can't take risk now, when will I? Never. So this is my background and the reasoning behind my investment strategy. But let's now get into the actual asset allocation and into the actual numbers of it. First of all, I'm not including cash or my emergency fund in here. I'm only talking about my invested assets. Let me know in the comments if you would like a separate video on how I manage my cash flow and my savings. Let's get back to the video. My asset allocation is very simple. 0 bonds, 100% stocks, just ETFs. That's because my long time horizon and my high risk tolerance. And before you ask, no, I don't buy single stocks. That's because I don't believe in trading or value investing either. I just stick to classic ETFs. ETFs allow you to get exposure to hundreds or thousands of different companies, offering high diversification and, historically speaking, a return that annually is between 7 and 10%. But don't worry, I will cover more about this in future videos. Let's get more specific now. Let's talk about which ETFs I invest in. Well, there are two. The first one is called SWDA, while the second one is called XDWT. The first one tracks the performance of the major global companies, excluding emerging markets. Sorry for my pronunciation, but sometimes it's so bad. Anyway, the second one is a tech-focused ETF, similar to Nasdaq in structure and performance, but a bit more diversified. I'm not a fan of emerging markets personally, but on the other hand, as you might have noticed, I'm very optimistic about tech. Remember anyway, this is not a financial advice, I'm just sharing what I do so you can take inspiration and build your own strategy around your life. So in terms of asset allocation, I invest about 30 to 40% in XDWT and about 60-70% in SDWA. Sorry, SWDA. Very important note, these percentages refer to the amount that I've invested and not the current market value. Unlike most investors, in fact, I don't really believe in rebalancing. If one of the two ETFs outperforms the other one, I just let it. I don't go and sell some of it just to keep things balanced. I just track what I invest, not what the market says it's worth. I know this might get controversial, so let's talk about it. Addressing the possible criticism, I know that my portfolio isn't the most diversified. Something very simple, such as BWCE, is way more diversified. But in my opinion, diversification is a bit overhyped, especially when talking about geographic diversification. It usually seems like people care about that only, but for me, for example, sector diversification often matters way more. That said, I know that I'm overexposed with tech. It's a huge risk, but I'm okay with it. I'm young, I save a lot, and I'm fully aware that if tech would crash, I might underperform the market for years. But even then, I will keep saving, I will keep investing, and my net worth is gonna grow regardless. I know that this strategy might not work for you, but that's exactly the point. Your investing approach should reflect your situation, not mine. So this said, let me know in the comments what your strategy is. Feel free to criticize mine and tell me if you would do anything different. And if yes, what? If you found this video helpful or interesting, make sure to hit the like and subscribe button in order to not miss the future ones. Thank you for watching and see you in the next video. Bye. Wow.